Usual suspects, dollar index, euro dollar, and pound dollar. Left-hand side daily chart. This is the SIBI that we looked for the market to come back down into and not breach the midpoint and trade into the lower half. This little retracement back down into that area right there is this line here on the 5-minute chart. As you can see, it hits it perfectly, stops dead in its tracks, consolidates around it, and then runs up, uses the top of it here, shows discount sensitivity, and then starts to rally higher. So you can see it delivering right to the tick, okay, as I was indicating. Last week, I talked about this, and it was delivering here perfectly on Tuesday, and then given it time to expand, it rallies up. And it's the short-term little buy side in here, trades back into the volume imbalances here. But we're going to look at another portion of price action. These quadrants being added, you can see how it's beautifully holding price in the upper half. That was the condition I told you, the algorithm that doesn't supposedly exist, right? The algorithm is going to keep price in the upper half and not trade in the lower half, delivering to the tick and then delivering up right out of there. Okay, even giving another kiss right in here before it leaves. Trading higher, explosive run up into this premium wick. Okay, so this premium wick is part of this sell side imbalance, buy side inefficiency. Trading above this because we have relative equal highs. So what would be the next PDA rate that would go above that? Well, you're going to look at the wick here. And every wick we treat like a gap. And how do we treat gaps? Just like I did down here. We grade them. Okay, the high, upper quadrant, consequent encroachment, midpoint, lower quadrant, and the low. It's quadrants on gaps and inefficiencies. Wicks are just like a gap. Okay, so it's reaching up into this premium wick. You want to have these levels on your chart. That's these levels over here. So here's the low of that premium wick on this day here. Here's the lower quadrant, and then here's the consequent encroachment. And they've left relative equal highs here. That's rather convenient. And this wick here, this premium wick. Now, why am I picking this one? This one's longer than this one. We go back one slide so you can see it. See, it's slightly higher than that one. That's why I'm annotating it, okay? But if we're down here in the intraday portion of the day, like here, and it's going to trade up higher, I don't want to just simply use this one when this is a lot more range. Well, not a lot more, but it's more range by contrast to this range. And they're right next to each other. So which one am I going to use if I'm going to be using any gradients on a wick? This one. It's the higher reaching one. So that's why this is being used here. You can see that the bodies are being respected of the low of that premium wick. And then the bodies are accumulating around here as well, inside of a fair value gap. Then it rallies up, it comes back down and touches the high of it, and then sends it in here. So there's an overlapping of these quadrants that need to be transposed into your lower time frame charts, like a 1-minute chart. Here's the part where you write down your notes, folks. If you see a quadrant or a PDA array that has gradient levels in it too, if that is sitting right with a PDA array, like a fair value gap, an order block, a breaker, it supercharges the likelihood that it's going to be very sensitive. And if you apply time, what time of day, what day of week, is it a macro time? It further increases the likelihood that it's going to be moving in what you would expect based on your analysis. Now, it doesn't equate to profitability, because just because you can read price action, just because you can time the market, doesn't mean that you can manage yourself or manage the risks of money management or trade management. It just means that doing these types of things will help make you better at tape reading, which is what I promise everyone. You will get better at reading the tape, reading the market live, watching what it's doing. But I can never promise any of you being profitable, because there's a big barrier between knowing how to read price action correctly and accurately and profitable trading. All right, so here we're looking at, again, just moved forward in time a little bit in the same day here. The market reacted off of that inversion fair value gap right here. And we'll start putting in the PD rates. Here's London open kill zone, New York open kill zone, and the London close. Okay, so it's kind of like caps the day for Forex. I don't really like to look at anything in the afternoon hours post noon time, Eastern time for Forex or dollar index. It's just, there might be some moves then. It might be simply just related to FOMC, rate announcement stuff. But generally, there's really no real interesting price moves for me after 12 noon. All right, so here is the PDA raise. We have a bullish fair value gap, institutional order flow entry drill, which is where it goes in just a little bit, but fails to even go to halfway or consequent encroachment. We have a breakaway gap here, and then we have another bullish fair value gap with the institutional order flow entry drill again, once more, just trading in, but not hitting the consequent encroachment halfway point. Bullish fair value gap here accumulates around the consequent encroachment level, hits the high of it here, sends price graining higher into the premium wick. Look at the price over here, 97,649. That's this one here. That's this wick low. That's the low of that premium wick. So once it trades into this here, it comes back down in. That's the upper quadrant of that premium wick. And now it's a fair value gap touching it as well. And it's also during a macro time. Hallelujah. Thank you, Jesus. There you go. Okay. You got another unicorn in your repertoire now. Rallies higher. So it runs up into the high of the premium wick here, which is 97.823. That's this here. And then we get into this premium wick. Okay, and the upper quadrant of that is 97,861. That's here. And then falls short of reaching the consequent encroachment, but leaves relative equal highs here. So here's your Euro-dollar daily chart on the left-hand side. This was a buy-side imbalance, sell-side inefficiency, but when price trades down and through it, this becomes an inversion fair value gap. If it's an up-close candle that I'm anchoring to, okay, it says it's a buy-side imbalance, sell-side inefficiency, and prices below it, I'm expecting this to act as an inversion fair value gap. That's basically what I'm saying. And the market trades up into here, outside the box a little bit, and then breaks aggressively lower. But the market crashes lower on Euro-dollar on the higher run on dollar index. Now inside of that inversion fair value gap, I already have the gradient levels, and I have this discount wick graded as well. And then we have the old inefficiency down here that I mentioned last week. So here is the London open kill zone for Euro. The market breaks lower after creating a fair value gap institutional order flow entry drill there during the London open kill zone. Trades lower, accumulates shorts around the consequent encroachment of the inversion fair value gap. You can see that here, that red line. Just check the chart over here at the price, and you'll see it's this area in here. So inside this daily range, price is now sitting right here at that moment, is yet to do any of this price action. But then we break away with this gap here. It's leaving a consolidation in consequent encroachment of a higher time frame PD array. So any gap left there, that's an easy way of classifying it as a breakaway gap. You guys ask me, how do you know about and annotating specific gaps and calling them breakaway gaps? This is one of those things right here. Okay, this is the stuff you're supposed to put in your journal. This is what you're supposed to write down. This is also what you're looking for all the time. When you go through your analysis, look for gaps that are inside consolidations or midpoints of higher time frame PD arrays. So the idea here is we see the market trade lower into the lower quadrant, trades through it, and then we have a SIBI here, sell-side imbalance, buy-side inefficiency. We have the institutional order flow entry drill, where it goes up and it fails to get to the midpoint, consequent encroachment of the fair value gap. Breaks lower, comes right back to the low of that inversion fair value gap. So we're trading right here at this price on the daily range, right there. Okay, and the market starts going lower, creates another fair value gap, respects the consequent encroachment, and then breaks lower once more. SIBI, fair value gap, trades up to consequent encroachment again and moves into this old inefficiency here in a green rectangle. We trade down to the low of it twice, comes back to the high of it. Okay, this is not classic support and resistance, folks. It's trading inside of an inefficiency during the New York open kill zone, creates the high, trades lower. We have immediate rebalance here, breaks lower, trades to the high of this discount wick, and then we trade to the lower quadrant here. That's this point right there. All right, continuing on with the British pound versus US dollar or cable. Left-hand chart is the daily chart, and the 5-minute chart is here on the right-hand side. So on the left-hand side, we have this SIBI here that I've graded, and then we have this fair value gap, and I have this discount wick annotated, this discount wick annotated, and this discount wick annotated. Okay, so when you're looking at the lower time frame chart, anytime you see these levels here, all you have to do is look at the price. Okay, these prices will tell you where you're at in proximity to the daily range and where you're at intraday. So that way you're not going to get lost in the sauce. Okay, so the market opens up inside that fair value gap. All right, so with it trading in the opening of that fair value gap that's bearish while dollar's bullish, that's going to cause euro and pound to fall against the dollar's rallying. We have a London open kill zone, sell side imbalance, buy side efficiency, institutional order flow entry drill, and then once more we trade back to it here. So because I didn't want to have to cram in any kind of annotations there because I want to do it in one chart and be done, I didn't annotate here, but it's institutional order flow entry here. And then we have the low tagged one more time of that fair value gap. Trades lower, but also notice it's hitting it at the same time it's consequent encroachment. Okay, so the upper quadrant's 135.074. That's this right here. So we opened, traded higher, and then went lower. This is during the like the Asian session going into midnight area time. It doesn't show it on the chart because I want to have the whole run of the day from London session down. The fair value gap here trades up into consequent encroachment there, breaks lower, accumulation around the low of that inefficiency of daily wick to right here. And right now we're in the daily range at this level here, but it's right there. And then we trade away from it, come back up, hit it once more, break lower. We have a bullish fair value gap here that we went back and forth through, and now we're below it, trades back up to it here. So it's an inversion fair value gap. Note the color. Then we have a sell side imbalance, buy side efficiency here, fair value gap. The bodies are respecting that, and it only stabs up just to get to the inversion fair value gap. Breaks away here. So this is a measuring gap. It never filled it in again. And this is a bearish order block. We're breaking lower, but look at the overall run. This is about halfway from this high down to that low. So measuring gap's always about halfway. And we're trading into now this inefficiency by the discount wick. We trade down low, hit the high of it, trade to the lower quadrant, come back up to the high, hit the order block, which is a change in state of delivery. Change in the state of delivery is the opening price of an up-close candle. It was rallying here. The algorithm changes gears, and anything at that price or lower, it will spool and reach for lower discount or sell side. So inversion fair value gap, we have a bullish fair value gap that we trade down through. We trade back up to it here, reject and go lower during the New York open kill zone. We come out of that discount wick, and now the next one would be in here. And this level's here. So we have a small little fair value gap, trades to consequent encroachment there, and then dips down into the upper quadrant. Doesn't quite get to the consequent encroachment, which is the midpoint of this wick down here. And it rallies up to the lower quadrant of this level here. And that's the level right here, right to the tick. Look at that. This is how you use inefficiencies in the wicks. Okay. I'm focusing this portion of the mentorship with just this principle here, because it answers a lot of the questions you've had looming for years. How do you know which one? This is what I'm doing. This is what you're looking for. You're looking for a blending and a confluence of PD arrays and time. And if it happens to occur inside of old discount or premium wicks of candlesticks, you're going to have wonderful odds in your favor of seeing price action move like you want it to. But then the market just consolidates around the low of that inefficiency right here. But it's a beautiful sell-off from this fair value gap here down to a discount wick. Notice we didn't even have to break the range going into this low. See that? So it's trading inside the range of what? That candlestick's low and that candlestick's high. See, it's a whole lot more going on than what you think, because there's so many things you can do. And once you understand the freedom that my concepts give you, all you have to do is find something that makes sense to you. What PD arrays can you see? You only need one. I mean, look at all the ones in here. See, the problem is you want to look at the ones up here, or you want to be up here near the high in the open, which is not even shown in the chart here. Think about it. Like the highest point this price scale goes is 1.3515, and that's right in here. It's not even getting up to the fair value gap, which you can look in Asians into the midnight hours or so, you can see that forming that portion of cable's high. So have that in your journal, but I'm focusing primarily on this because I just want to talk about the London session going into the New York session. And then going down into the London close where it creates the opposite end of the daily range, which is what you saw down here. There it is. So anything that's formed a low in this period here, I'm going to be content with that probably being very close to the low if I'm bearish.